Hello, everyone.
Hello.
Hello, everyone, and welcome to Wealth Week. We are going to give you all just a moment to come in to share with everyone. Hold on, let me get us up here. Hold on. Okay, hold on. You are in the back. Hold on. We'll give everyone a minute to come on in. Come on in, everybody. Mm-mm.
Trying to share it on my Facebook page.
Kelly can't post. Okay, you know what? I'm gonna go to the private chat.
Okay.
And I am sharing this. Everyone, give us one moment.
Okay. Now I can see somebody.
And give me one moment.
Okay.
Give me one moment. Wait. Hold on. Here we go, everybody. Okay. Hello, everyone.
I'm gonna be able to share it on my page, or can I? Okay.
Okay, you can share it on your page. Come on in, everybody. Give us a minute.
Okay.
You got it. I'm sharing. I am sharing. Uh-oh. Okay, ladies, CEO.
Welcome,
Okay,
welcome, welcome.
welcome. Turn your phone. Can you turn your phone on mute?
Oh,
There we go. There we go. Welcome, SheEO. Welcome. I have a treat for you all tonight. This is the start of Wealth Week. So do me one favor. I want everyone to come into the room. I want you to I want you to share in your groups. I have a treat for you all tonight. Miss Amira Calhoun is going to drop some knowledge with you on Wealth Week. We're going to give you a moment to come in. She is going to give you the tea on credit. So you may have heard something about credit before, but if you did not hear it here with us, then you're going to get a treat tonight. So come on in, share, hashtag live, tell us where you're from. Miss Amira, tonight You are going to talk to us about building generational wealth. How are you?
I am doing great. How are you?
I'm good. Welcome to the SheEO district, and thank you so much again for gracing us with your presence to talk about generational wealth. Can you tell us a little bit about yourself?
My name is Amira Calhoun. I'm actually 23 years old and single mom of one. I have a son. He's about 17 months old, and so definitely the light of my life here. But that's pretty much like about my personal life. But basically, with credit, I started before. I wasn't really bad at credit or finances because my
Mm-hmm.
grandparents, I was raised by my grandparents, by the way. They did teach me a little bit about it, but I didn't know, a lot. And so I was able to find an opportunity where I'm able to learn more about credit, help myself with my credit, as well as to help others, um, use their credit to build generational wealth. So, um, yeah, that's pretty much about me. I've been doing that for about a year now.
Okay, let's talk about a little bit about your bio. I know that you just mentioned that you've been doing credit for a year, but you also stated you mentored over 30 people to become successful credit brokers like yourself. You help your clients find the best credit restoration
Yeah.
programs based on their unique credit profile. You have partnered with companies such as United Credit Education Services, Credit My Rent, First Progress, My Plan, Smart Credit, and more. And you strive daily to educate your community on the importance of amazing credit.
Hmm.
So, can you tell me what is the difference between why would someone need to find the best credit program for them?
Um, I know that a lot of people they fall on hard times, which could mean that their credit is kind of like a victim to that. And so, everybody's credit situation is different. Everybody's credit profile is different. So, as far as credit repair and really helping build credit, you really need to find something that works best for you because not everything works for everybody when it comes to credit because credit is so unique in certain ways. And so a lot of people may have different things on their credit that may be situations that one program can't fix but this program can. So I really like to help my clients find something for them that is going to guarantee them results.
And you know what? That is so good because a lot of times you hear people talking about credit restoration programs, and sometimes people don't know, like they may think that one program fits all.
Right.
So it's good
Exactly.
for you to really break it down and explain to them that there are different programs based on people's credit needs.
Right. Right.
So, what are some of the common issues you see regarding people and their credit?
um some of the common issues would be I get a lot of clients that don't have any credit at all where they're like they have used cash for most of their things that they have, and so they have really no credit. And that's a situation in itself because they I know a lot of clients that have that situation.
Mhm.
They'll think that they need credit repair when no, you just need to build. And so I get that a lot where I get clients with no credit. I also get clients that have like a lot of collections and things that they've allowed to come on their credit report. And I love to work with collections. I don't know why, but I just love them because they're so easy to remove. Like they really are. Um, but I get a lot of people that have like collections, but those are the main two as far as what I mostly see as far as with credit profiles, especially with those collections. Like a lot of those things happen because like say medical bills or things like that, or like you know
Mhm.
some people might apply for something and then they get behind on the bill or something and it goes to collections or whatever, but or they might apply for a loan and that goes to collections or whatever. But yeah, collections are very, very common on people's credit profiles, and a lot of people don't think that they can be removed. Like they can. They really can.
So how does collections affect clients actually building their credit? Like what does the negative impact of collections have on clients?
um with collections, um as far as building their credit, basically it's kind of like something that's holding them back, that will be holding them back. So even if they have those collections on there and they try to build it, like getting a secured credit card or getting like a trade line or something like that, it would still not give it the effect that they would need when building, because they still have those negative items on there. So the main thing with the collections, or really any negative item, is getting it actually removed, whether that's being disputed or you may do like a pay for deletion or something like that. But definitely getting those negative items removed, because it's kind of like because your credit is kind of like a GPA. It's like where, you know, you get a couple of you get some A's, it's maintaining or whatever, but you get an F and it just drops
Right.
horrendously. Yeah. So yeah, you definitely and so getting those negative items removed off of your credit report is very, very important when it comes to really building the credit too as well.
Okay, so I know you talked about collections and building. So, out of your credit profile, what actually does the most harm to your credit when you're looking at trying to establish your credit and get with the credit bureaus? Which out of your credit profiles, which one of those things harm your credit the most?
Late payments.
Oh my
Late
gosh.
payments, late payments, late payments. Because your credit score is counted for 35%. Well, payment history is counted for 35% of your credit score. So that's a big chunk of your credit score. So that's whether or not you're making your payments on time or if you're making them late or delinquent. Then that really affects it. That's like when you make a late payment, your score can literally go down 100 points or more
Oh my
from just
gosh.
one late payment. So that's why I always stress to my clients, especially if they're going through the credit repair process, to be on time with your bills as much as you can. Like do not make a late payment at all. Now, as far as the credit bureaus and how they report and everything like that, when we say late payments, we mean as in like 30 days late or more. Like
Mhm.
if you were say maybe a couple of days late, like on your light bill or something like that, then it won't report to your credit. That won't report to your credit. But when it
Mhm.
gets to being like 30 days late, then that's when it starts reporting. So I tell my clients, like, if you just have to be late, don't be but like 3 days late. Like don't get to a point where it's reporting on your credit, because that can really, really, really,
Mhm.
really, really affect it, especially when we're going through the repair process and we're fixing your credit and then you make a late
Oh
payment.
my
It's like
gosh.
all of that work that we just did.
It's for
you know
nothing.
right, for nothing pretty much. Yeah. So
So, ladies, I hope you have your pen and your paper. Remember that she said 30 days late. So, like 30 days, 60 days, 90 days.
mhm,
If you maybe forget a couple days, it may not be as bad, but you
right.
definitely do not want to go into that 30-day range. Okay,
Mhm.
so let's rewind a little bit. What are the categories that people should look for, like the percentage on your credit profile? So like I know you said late payments count and
Okay.
you
Yeah.
have collections count. So what else makes up your credit profile?
Yeah, so you have 35%, which is your payment history. That's your on-time payments or your late payments. You have 30%, which is your available credit. So that's when you start maxing out credit cards. That's when your score, drops, because it counts for 30% of your credit score. So you want to make sure you have available payments. Now, 15% is 15% is actually um, your new credit inquiry. So how many inquiries that you've actually had, like applying for things. And then 10% is the mixture of your involved no not involved revolving loans and installment loans as well. So that's pretty much how your credit report is made up of, or your credit score is made up of.
Okay, now I see you said a mixture of accounts. So tell us, what is a good mixture? Like what type of credit do we need to get?
Yeah, so installment loans are basically like those loans that are a set price, like an auto loan or a mortgage, and it's paid back in installments. So that's what an installment loan is. And a revolving loan is basically where you get an amount of credit and you pay on that every month, like a credit card or things like that. And so just having a good mixture of that. So say if you have an auto loan and you have a mortgage, then you definitely want to make sure you also have some secured credit cards or some credit cards or like a trade line that is a revolving loan as well. And so it's really like every credit situation is different. So it's really no like set amount of installment that you need and a revolving that you need. But basically for you and your unique credit profile, you want to make sure that you actually have a good mixture of both. Whatever that mixture may be for you, basically.
Okay, so I know that you said 15% is new credit inquiries. How does credit inquiries work? Because you know how sometimes when people are going to buy a car, right? And they may not get it with their credit union, but they may go to the car lot. And sometimes, car lots, if you're not going to somewhere like, let's say Honda, because Honda has their own financing, but let's say you go to Ford or Chevrolet and they want to shop your credit.
Hmm.
And so you may end up with, like, I know people probably have credit monitoring, and we'll talk about that a little bit later. But you know how when you someone runs your credit, it dings on your phone. You like, wait a minute, what is all this
Yeah.
going on?
Yeah.
So,
Hmm.
so tell us about how credit inquiries affect your credit, and does those little inquiries when you go to the dealership, does that affect your credit bad if you have like 15 people running it?
Yes, that affects your credit very much. Like it literally like can drop your score like 50, 60, 70 points just from applying so many places at one time or within a short amount of time. Because you want to make sure that you refrain from applying for so many things within 12 to 18 months, because that's how it reports to the credit bureau. So if you, I know we've all been there before when we had to get an auto loan. So if you shop for auto loans and like you said, you go to the dealership and they're running your credit like 4, 5, 60 times while you're at the dealership, you want to make sure like, no, don't do that, because it's going to run your score to the ground. Like, even though it's only 15%, it's still account. That's still a lot. Yeah, it still accounts. So you definitely want to make sure you refrain. I usually tell, like, as a credit hack, I usually tell my clients, if you can help it, especially while we're actually going and repairing your credit, but if you can help it, try not to apply for anything within a whole year. Because if you have a year worth of like no new credit inquiries, then that will really help your score. Really help your
Okay,
score.
okay, yeah, because that, like, you be like, hey, you can run my credit a couple of times, but please do
Yeah.
not run it with everybody in Jesus. Like, if you don't get the first, if
Yes,
you don't get the first answer within the first couple of minutes, just say, okay, this is all we have, because that is devastating to be working on your credit, and the next thing you know, it's like, hey, your credit score dropped 58 points because they want to continuously run your credit. And so
exactly.
with available credit, let's just say someone has high credit, you have a high credit limit and you're close to the end. How can they change that situation and get their available credit down if quickly, if you're working on someone's credit?
Yeah, so a quick way to do that is definitely to this is like a credit hack that I tell people, definitely to make multiple payments a month on your credit cards. So you know how you have that one monthly payment that's required, but say if you work and you get paid twice a week, I mean not twice a week, twice a month, like
Mhm.
bi-weekly, every time you get paid, make a payment on your credit card, and that'll knock it down real quick. And even if you like say if the minimum payment is like $40 for the month that they give you,
Mhm.
you can pay $40 one week that you get paid, and then the next week pay another $40. You know, just to kind of get it down really quickly, especially when we're going through the credit repair process, because that's a big thing is the amount owed too. So just making multiple payments on that is a good credit hack. And then it also will boost your score really fast, because it actually, when you make that multiple payment, or when you make that second payment 15 days before it actually reports to
Mhm.
the credit bureau, it counts as two payments from the credit bureau. So it's like you're actually making double payments. Not only are you reducing the limit, but you're also reporting double payments on your credit report. So
Okay, so I heard you say like 15 days prior to your credit reporting.
mhm.
So why tell us about the credit reporting dates and the payment dates, because I know a lot of people get that confused. Like, when should people pay their bill? What's the best time to pay your
Yeah,
credit
so
card bill?
yeah, so as far as credit cards, you definitely want to pay on the due date. But if you're actually either on the due date or a couple of days before, but if you're actually going to do that credit hack where you want to, get it down a lot quicker, you want to pay it 15 days before the due date, and then make another payment on the due date, and then that way it'll report twice. Now, usually 15 days is like it really depends on your credit card, but usually 15 days is like the standard of when they'll allow you to do the two double payments, so that's why I tell people do it 15 days before, and then the day of your due date. Mhm.
Okay, now I know you talked about credit history. Is it a certain length of time like you should have accounts? Is it like so does it make a difference if you had an account like for 1 year versus 10 years? Or
Um, It's really no difference. The
Mhm.
only thing would be just to, if you can, to not close any accounts. If you can, because having good credit history is good as well. And having credit history for a long time is good as well. So you don't want to close any accounts. But as far as 1 year to so many years, it doesn't really, matter in that aspect of it. So.
okay, so you mentioned revolving credit. So how does it affect your credit? So like let's say you do have a car note and you have it revolving for like 60 months. How does it affect your credit when you finally pay that vehicle off?
Once you pay that vehicle off, that will actually go down on your amount owed, which is your credit utilization.
Mhm.
So that affects about 30% of your credit score. So that will help your credit score a lot once you actually pay down. And then plus you would be making payments on time for that entire time that you've been paying on it. So that's also helping your credit as well as you're making the payments to pay it down. So but when you do pay it down, it definitely will help your credit, because now you've eliminated that debt basically, and now it's more
Okay.
available credit that you have.
Okay, we have a good question since we're on this topic. What should your credit utilization be?
um I mean, there's really like every situation is different, so there's really like no set number. But I would say like when you get down to credit utilization in general, you want to
Mhm.
make sure that it stays between 30 to 10% of the credit limit. So when you have like a credit card and say your your credit limit is $1,000, right? And so you
Mhm.
want to make sure that you only use 100 of that. or at least if you do have to use more than that, at least pay it down to 100 every month, because that'll be 10%. So between 10% and 30% of your credit limit is pretty good of where you want to keep it at.
Okay, so is that individual credit, like each individual, or is that as a whole? So, like, let's just say you have a total of, let's say, $100,000 worth of credit. Is it 30% kind of that total, or like, let's say you have 5 credit cards? Should each one of those be paid down? So, do they penalize you if one is kind of more like 50%, and then the other one is like 10%?
What I would advise my clients is to have each one be paid down between 10 to 30%. Because then overall, that'll help you out overall. So I just tell my clients if they have about six, or well, six, that's too much. But they have about 5 credit cards. You still want to keep the utilization down for each credit card to where it needs to be. So about 10, 30%, then you'll be good to go on each credit limit that you have.
So, are there any credit cards that people should avoid? Because I see a lot of people complaining about like store cards, like Synchrony Bank and all them. Is it any cards that you suggest people avoid getting?
Um, I wouldn't suggest anybody to avoid a certain card, but I would
Mhm.
definitely suggest for people to avoid a certain interest rate on that card. Like if you
Mhm.
know the interest rate is going to be, well, first do your research on the interest rate, first of all. And if you know that it is too much, which about, I would say a good interest rate, a great interest rate will be about 5%, or
Mhm.
up to at least about 12%. But once you get to around 13, 14%, that's when it can get kind of, you don't want to do that. But um, so like
Hmm.
I wouldn't really suggest, to avoid a certain card, but just avoid it if the interest rate is bad. Basically, if the interest rate is bad, avoid it. You don't want to do it. Now, I can say, don't apply for so many store cards. Like they may offer it, but you don't need it. So you don't need it,
Right.
don't apply for it, because also that would be an inquiry on your account. And then plus it's just credit that you just won't need. So that's what I usually tell my clients, about the interest rate, and then those store cards, things like that, like Victoria's Secret. If you know you're not really shopping at Victoria's Secret, don't apply for it just to get the discount that they're giving you. Like, yeah, no, don't do
Exactly, because if you don't use those cards, they will close your account,
that.
and then
Hmm.
that's another thing that you have to
Yeah,
worry about. And
right.
they close them fast. They don't just let you like Capital One, like real big credit card companies, like the store cards. If you are not using them, they will close them. Like, so
Yeah.
you have to be actively using it because they don't let you linger out there a
Hmm.
lot. Now, I know we have a lot of people that are in business. Well, most of us in here are in business. So, can you tell us how your personal credit affects your business credit?
Your personal credit definitely does affect your business credit, and basically because if you don't have any business credit, they're going to have to use your personal credit anyway. And so, applying for things like business loans, well, that's really the main thing: business loans. Um,
Mhm.
they're going to pull your personal credit for things like that, especially with the banks. So, having good personal credit will not only allow you to get the knowledge and the financial literacy behind having good credit, so you can use that towards your business credit to also do the things that you're supposed to do for your business credit, but then it also helps you to even get business credit. So they kind of both go hand in hand. Well, not kind of, they do. Very much. Yeah.
So, if someone wanted to work with you to get their credit done, is it anyone that you can't work with? Is it someone that you like, look, I cannot help
Not really. Now
you?
I know bankruptcies are very, very tricky. Like, I usually don't take clients that are currently in bankruptcy,
Mhm.
because it's like the bankruptcy is kind of helping them with their debt, but we would still need to get that bankruptcy removed off of their credit report, but we can't do that until at least about a year or two after their discharge from it. So I don't take clients that are currently in bankruptcy. But other than that, I would still have to, of course, see their credit report for myself. But other than that, bankruptcy is like the only thing that I just, we can't really do much with if you're currently in.
Okay, I know that you mentioned that you have helped people become credit repair agents. Can you tell us a little bit more about that for someone who, they have good credit and now they may want to help someone else get their credit together?
Yeah, so I'm in actually a program or a platform that allows me to be able to do that. So basically, what we do, they would just be come in as a referral agent. They would refer people to the credit repair companies like the UCES protection plan, the smart credit, the my plan, all of those products that I work with. They would start referring people. They would start, of course, getting the training and mentorship from me and other leaders in our company, and pretty much just learn more about credit. Now we do have an opportunity where people can actually come in and become referral agents, and then they're also able to make additional income from home while getting their credit fixed as well. So their credit doesn't have to be good for them to start working with us as well. So they're kind of learning as they're earning, basically.
Okay, so if let's say someone didn't have great credit and then they wanted to become a credit repair agent, would they have to let someone else repair their credit or can they just repair their own credit?
They would go through one of those companies, like the UCS protection plan. That company actually like prepares the dispute letters for them, things like that. And so they would go through that, and then that will kind of take care of their credit, pretty much. Mhm.
Okay, and how does having good credit build generational wealth? What can you do with good credit to help you and your family down the line?
With good credit, basically what you can do is you can have things like low interest rates on cars, better or no down payments on cars, which means you're keeping your money in your pocket. You're also able to have low interest rates on mortgages, things like that. So you're keeping more money in your pocket to be able to save and to be able to pass down as well. So having pretty much the power of credit is that you're able to get the things that you need or get the things that you want without using your money to do that. And so that's kind of like the simple way to put it as far as like how good credit can help you build generational wealth in that aspect. Just basically helping you keep more money in your pocket. So as you're making more money,
Mhm.
you can also be saving it and helping, others behind you or your generations behind you.
You know what? A lot of people really don't understand how much money people spend in interest. Like
Hmm.
interest, the money that you're spending on interest and fees and all of these different things, it can cost you in the long run. Like right
Oh
now,
yeah.
I know the housing market, the interest rates are pretty low. And just think about if people are getting like 2% interest rate and you have a 10% interest rate, that is a big difference on the
Yes.
note that you will be paying for your home. So if you think about having $1,000 note versus having a $1,500 note, just because you have a high interest rate, that extra $500 could be going toward investments. It could
Yeah.
be going toward anything. So that having a good interest rate is very, very, very important.
Oh yeah.
I know I had a question. I know you mentioned trade lines. Can you explain to the ladies how trade lines work and
Yeah.
how trade lines affect the credit?
Yeah, so trade lines are literally like just another word for new credit accounts or accounts on your credit. And so like your auto loan, that's technically a trade line, or like your credit card, that's technically a trade line. But you do have certain companies that will allow you, well, they'll give you a credit limit, whether on a card or at a store or things like that. And then that will be used, you would pay on that, like you would like a loan or things like that. And that is considered a different trade line. But basically trade lines are just accounts on your credit report.
Okay, and if anyone has any questions, please feel free to drop them down in the chat. I know Miss Amira wants to help you. There is no question that is too small because this is the time to ask while someone is giving it to you. And hold on. So, what would someone need to work with you? If they want to work with you, what do they need to do?
All you got to do is, if you want to work with me on your own personal credit, getting that fixed and handled, you just text credit to 334-306-2402, and we can do a free credit consultation. And then we'll pretty much, go from there as far as getting you set up with the things that you need. And then as far as if you want to become a credit referral agent, then you can text agent to 334-306-2402. We'll get you set up with everything you need to go, and we'll go from there. Get you set up with training and things like that.
So, working with you, do they have to have anything once they contact you? Are there any documents they need to get together?
Not exactly. Basic, just basic information like their personal information. Um, that's pretty much it. Because what we'll have is, with that protection plan that I talked about, which is the credit repair company that I work with, um, we have credit attorneys that'll actually go in and do a detailed analysis of their credit and everything like that. So they don't really have to worry about, any paperwork or things like that. But if they want to come in as an agent, pretty much all you need is your personal information, like just any kind of job, your social security number, and things like that. And then we'll verify your we have ways to verify, your social security number, things like that. So you don't really need any documents of any sort.
Okay, I think I have, let's see, I have a couple of questions. Okay, so when people have medical debt, right? Medical bills that they place on their account,
Mhm.
is it legal for them to place your kids' debt on your account? And how easy is it for them? How easy is it for you to get the medical debt off of a client's account?
Um, well, no, it's not really legal to place well, if they are minors, then of course, yes, it would be. But it's pretty easy to get those things off, especially if you have not paid on them at all. Because what we would do is we would leverage the Fair Credit Reporting Act to dispute those negative items. So like those medical bills that were on your report that were, say, they could have just gotten on there, or, been on there for years and years, we're able to actually get those things off by just simply with a dispute. Now, if you haven't paid on them at all, that's actually pretty good when it comes to collections, because sometimes, we can dispute it without you having to pay anything. And then plus, when you do pay on a collection, that actually says that you've agreed to the debt. So it'll be harder to dispute it if you've already agreed to it. And so usually for those clients that I have that have been paying on those collections and they still want to get them disputed or removed, what we'll do is we'll do like a pay for deletion, where we'll offer the creditor like a certain amount of money, or to pay it in full so that they can delete it. Because sometimes with collections, I can say, once you pay them off, sometimes they don't delete off of your credit report. So it'll still be a negative item on your credit report, whether or not you paid it off or not. So I usually advise my clients to, if they haven't paid on them before they came to talk to me, don't pay on them. We're just going to get them disputed.
Okay, so is it a difference between if the if the debt is held by the actual company or if it's held by someone that they pay or collection agency. I couldn't think of the name.
Oh,
So if
collection.
it's a collection agency or the company, is it a difference in disputing those charges based on if it's one or the other?
No, it's no difference. We can still work with both of them. It really
Okay,
is.
if you have power of attorney over a person, does their credit affect your credit?
Um, with power of attorney, um, I don't think that it would affect. It depends on like if you were to like apply for something for them or something like that, then maybe it would affect. But just in general, I don't think that it would really affect anything. Now, if you were like or if they were like an authorized user for you on like any loan or credit card or anything like that, then of course it is affecting both of you guys. But um,
Mhm.
I don't think that in general it would just affect it. Yeah.
Okay, so how beneficial is it to have authorized users? So let's just say I know a lot of people talk about, hey, I'm gonna add my kid as an authorized user on my card. How beneficial is it for the child to be an authorized user on someone else's card?
Yeah, so being an authorized user for someone else is very, very beneficial as long as that other person, has good credit. But yeah, because it actually links you pretty much with that person to the credit bureau. So if they have good credit, then you pretty much are building your credit as well as they are too. And so it's good to be an authorized user on someone else. It really wouldn't affect the person that is the person that you are the authorized user for. It really doesn't really affect them unless you mess up and then their credit does fall, unfortunately. But it is good to become an authorized user for someone like a parent or someone that you would trust, pretty much.
So if if let's say I have my child as an authorized user and let's just say I max my credit cards out, how does that affect their credit?
It affects them in the same way. Just how when you max yours out, there and that accounts for the 30% of your credit score. It also accounts 30% of theirs, so their score is going to drop as well. So that's why, yeah.
Oh my God. So parents, I know that y'all heard the hack to add your kid as an authorized user, but if you know you're not gonna do right with your card,
That's
then
true.
just leave them out of it and let them build their credit the natural way because you don't want to ruin their credit. I mean, is that similar to like let's say you get something in your child's name? Would that be similar adding them as an authorized user or getting something in their name?
It's similar as far as the effects, yeah. Because same thing, like you said, if you put your child's name on something and you're not paying it, then that affects that child.
Mm.
It definitely does, and so it's kind of like starting them off, you know, in the back instead of with a head start. Now, if you do put your child as an authorized user and you know about credit and you're financially literate about your bills and things like that, and you can build good credit and you have good credit, then that would be great for them because then they'll start off with a head start, pretty
Right.
much.
So
Mhm.
as an authorized user, do companies tend to lend people that like let's just say that's the only thing that they have on their credit is are those authorized accounts. Do lenders still favor them if that's the only credit that they have?
I wouldn't say favor, but it definitely does depend on the situation, like with the lender. But if that is the only thing, I would usually advise them to try to get something on their own. But I don't think that it would favor or be indifferent in that aspect. It really just depends on the lender and what they would like to work with, and if they would trust that person enough to do something on their own, basically.
Okay, so does your program help people like let's say they want to buy a home and they have, a kind of a low credit score? How long would it generally take for them to get their credit up? Just I know everyone's credit is a little different, but how long does it generally take for someone to get like home ready?
Yeah, so usually for our program, it takes, for most clients, it takes about 6 to 8 months on the program. And that's when you're doing the credit repair itself. We also offer things like budgeting, credit attorneys, credit monitoring, identity theft protection, all in one bundle. And so you're also not only fixing your credit and restoring your credit, but you're also restoring your finances so you don't get back in that same aspect as well, after the
Right.
credit repair. So it usually takes about 6 to 8 months doing that credit restoration plus the any credit building activities that they may be doing as well. Like the secure credit card or the credit my rent that we have, which is a great program. But
Yeah.
yeah, so most of our clients are satisfied within 6 to 8 months and are home ready.
Okay, credit my rent. How does that work? Because it's a lot of people out here renting, and I know that they would love to have that count as their credit. Can they do that?
Oh yeah, oh yeah. So with the Credit My Rent program, basically what we'll do is we'll report your on-time rent payments to your credit, and there's different packages that you can choose based on your situation. But basically, you can do 2 years past reporting. So what the company will do is they'll report 24 months of on-time payments instantly to your credit, and then they'll also report every month, after you as you make your rent payments from now. And so you can do that package. They have a package where they'll do 1 year past reporting, where they'll report 12 months instantly, or you can just start from where you are now and just start paying your on-time payments with that. So it's very, very. Oh, I think we okay, good, good. So
There we
that
go.
credit my rent, that has definitely helped a lot of our clients see improvement in their score very, very fast, especially when they do that 2 year pass reporting. Like if you've been renting at the same place that you're at now for like 2, 3, 4 years, like
Mhm.
you can go as far back as 2 years ago with all those on-time payments that you made, and they'll report instantly.
Wow. Now I know that will help someone because just getting 2 years worth of good payments on your account, that can be
Yeah.
gold. Oh my
Oh
gosh,
yeah.
that is so
'Cause that's
good.
35% of your credit.
Wow.
Yeah.
So if there's anyone out there that's renting and you want to get those payments on your account, contact Amira. She can definitely
Yes.
help you. Um, so I remember, and I know I want to ask you about credit monitoring.
Mhm.
How beneficial is it for someone to have credit monitoring?
Very, very beneficial, because it's like, how can you keep track of something if you don't know what's going on with it? Or how can you have good credit and want to build your credit if you don't even know what's happening? So credit monitoring is very, very, very important. Like I know, just me as a kid, I was well, not a kid, but at 18 years when I first got into credit, I was always checking my credit score. I was always checking my report. I was always having, notifications come to my phone if something, was going on with my credit report. So it's like, it's very
Mhm.
important to stay on top of that. Yeah, very important to stay on top of it. And we use Smart Credit,
Mhm.
which is a credit monitoring app. They have a lot of extra things like money management, and like where you can pretty much do online disputes and things like that. Even though we do the disputes with the protection plan, but they have that offered in the Smart Credit. But basically, um, with that, is very, very interactive. It's very accurate, because I know a lot of us may use Credit Karma. I still kind of use Credit Karma, but it's not as accurate as it should be. But that Smart Credit is very, very accurate. They also give you like an extra feature where you can kind of see where you're headed, or it'll give you like a goal or your future score based on what your score is now, based on your
Mhm.
credit profile. It'll give you a future score of kind of what direction you're headed. So I thought that was cool. But yeah, credit monitoring in general, even if you don't use smart credit, just find something so that you can stay on top of your credit and your credit profile.
And that's important because if we're going more toward the digital age right now and a lot of technology, that credit monitoring, as soon as someone runs your credit, it pops up on your phone. It's like,
Hmm.
hey, you have a new inquiry. Hey, someone is
Hmm.
doing something. And I remember once I went to a car dealership and I purchased a car from them before,
Hmm.
and I went back just to get some more information, and they ran my credit. And I didn't tell them they still had my information on file from last time. And so I'm sitting here and my phone just like ding, ding, ding. I'm like, what is going on?
Oh
And
my
right
goodness.
then, I'm like, how are you running my credit? I didn't ask you to
Right.
run my credit. They still have your information. So that credit monitoring is going to be key to keep up with what's going on in this digital age for people who
Yes.
steal your information.
Yes.
And it is very hard, especially like with the IRS and stuff like that, if someone has your information. So you really do want to keep on top of that. So I know, and we have a few more minutes, but I have, let's see, is your credit program ongoing? Like, let's just say, what if I get like in the 720s? Let's say I get a 720. How does your program continue to help me once I reach my desired credit score?
Um, it's pretty much like I said, with the protection plan, it's 11 other different services that you're getting with the credit restoration. And so you're getting like the budgeting, the credit attorneys, the credit monitoring, you're getting the identity theft protection. You also get a will and trust fund, and then you're
Wow.
getting a YFL family mint, which is basically where you can continue to teach your little ones in your household about credit repair and financial literacy. You're also getting savings goals where you can calculate, how much you need to put back for if you're saving up for like a home, car, house, or I said house, but a home, car, or like a vacation or anything like
Mm-hmm.
that. Also debt payoff program. So it's a lot of things that's within that program that you can continue to use once you reach your good credit score. But at the same time, that program is a subscription. So if you are satisfied with your credit and you don't really need the other services, then you can easily just cancel and move on.
Counseling.
Yeah, so it's a subscription. So you're not like contracted into anything. You don't have to be a member for a certain amount of time, things like that. So
Okay, so how does your program have something that will keep people from like running your credit, like I just suggested, just all willy nilly? Sometimes people want to see if they can get you as a client, and I know the credit bureaus kind of do soft hits on your credit all the time to check your status, but can you deter someone from getting you hard credit hits without your authorization?
yeah, so we do have that identity monitoring and identity theft protection. So that's what's actually offered in it. In it, we actually partner with Allstate to do the identity monitoring and identity theft protection. So basically, what will happen is um, it technically won't keep them from actually running it, but if they do, it'll give you a notification and you can say, no, that was not me, or I did not authorize that. And then we'll go from there as far as getting that hard inquiry removed. Because you didn't authorize it, or we might have to, file a case and go through all that. But yeah, so that's with the identity monitoring and identity theft protection.
Okay, so would it completely lock your credit down? So you know how sometimes when you have to call like the IRS and call different agencies, does it help you contact those agencies to alert them that hey, someone has been doing fraudulent activity on your account?
Yeah, so with the identity monitoring and identity protection, it does lock down your account. So it's kind of like, how when you have a bank card and you lose your card or whatever, it'll freeze your account. It's the same
Hmm.
way. It'll freeze your entire credit, so nobody can get in, nothing can get out, basically. And so yeah, it definitely does do that.
Okay, and so if you had to give the people one hack, one trick, one tip, the best tip that they could use today, what would it be?
I've already said it, but it is the best tip ever. But pay your bills on time. I know this like it's kind of like a okay, yeah, we're supposed to do that, but like you guys, it's very, 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 very important to do that. Um, and of course, if people go through hardships, people go through things like that, so I would definitely also say, if you might be one of those people that have went through that, um or that may go through something like that, then have something on the side to where you can make additional income, to where you can make your payments on time, because that's very, 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 very important.
Okay, and how can everyone get in touch with you again just so we can get that credit fixed, so we can get our identity protection, our budgets? How can we get in contact with you?
Yeah, so you guys can definitely text credit, or actually no, I'm gonna do this. Text SheEO. Text SheEO to 334-306-2402. That's text SheEO to 334-306-2402. That's my direct number. And so you will be getting me, and we'll go from there. We'll do a free credit consultation, and we'll get you set up.
Okay, everyone, text SheEO to 334-306-2402, and
Yep.
she is going to know that the SheEO district sent you.
Mm-hmm.
Okay, it has been so great having you here
Yes.
today. We love all of your information. This credit is so very important,
Yes.
especially ladies, to all of us that are running our businesses. That personal credit is going to be key. It's going to be paramount to you getting your business side up and running, because like
Mm-hmm.
she said, if you don't have any business credit, they are going to rely on your personal credit. They're going to
Exactly.
rely on your personal credit, so you want to get your personal credit in order. So once again, ladies, text SheEO to 334-306-2402. And does anyone have any questions before we get out of here? Any questions? Thank you so much once again, Amira, for
Thank you for
coming and
having
giving
me.
us. We love to see you. If you have any information, drop it in our chat section.
Oh
If you
yeah.
see anything new, just come on in and give us the good information. Thank you so much. And you all
Thank
have a
you.
good evening out there in SheEO world. Come back and see us.
All right. Y'all have a good one.